All right. We are live. All right, here we go. And share my screen. Well, this was a nice little pump out of the blue. I saw some people complaining in the chat that they either missed it or they got stopped out down here, or it happened overnight. It dumped, but I'm not so sure what you're looking at when you say it dumped. I mean, here's the support line that we had and what that we talked about on the last probably 2 or 3 live calls. If I zoom out, let's go to the 1 hour. If I zoom out, you will see 112. Been talking about that for a while. 112K right here. Boom. That was the previous all-time high here. We hit it here before breaking out and going up to 123. We came all the way down and tested it again here and dipped below to 111.7, I believe, and then bounced and climbed all the way up to 104. 124.5, a new all-time high. And then we dropped in a falling wedge all the way back down to 112.3, and then 111.9, or 112 rather, and then 111. I don't know what was the low. 111.607. That was the low right there. Boom. But in my signals channel, I've mentioned many times bouncing on the 112 level, major support and resistance. Okay, that was just today. This one was before that. The other day, let's go back a little bit. BTC broke out of the downward falling wedge and is now coming to retest, waiting on a bounce. That was this line right here, coming back down to retest. It's either going to bounce or go below. BTC, this giant M pattern on the 1 hour time frame. This is where there might be some confusion because I obviously did point out the big giant M pattern on the 1 hour time frame could be a problem if this major support at 112 can't hold. We need to bounce here, or we could see a big drop to the downside. Watching closely. We did, however, break to the upside of the downward trending resistance, right side of the M pattern. This line right here, I had a really tight line here, and we were starting to break through it when I posted that. Right here, you can see it went above it and it was bouncing on top of it for a minute, and then it just kind of covered that all the way down and re-hit the 12. So we did, however, break to the upside of the downward trending right side of the M in the second image. But if it falls below 112 and holds under that as resistance, that is very important. It has to fall below it and hold under it as resistance. Then we can see further dumping. So I never got out of my long positions. I've been in it since the 19th, which is up here. And I had on Bitcoin, I had a TP. Where is it? Right here. I have a TP at 118.6. We talked about the Elliott wave pattern right here before that on the 19th. BTC, possible Elliott wave in effect. Could see a little lower before pumping back up to 119. Well, could see a little lower before pumping back up to 119, only to come back down even lower. What does that mean? Where were we? We were at like 114 when I said that. We were right here. And of course, I had the 112 down here. And, we were already saying that we think it's going to go to 112 first. Could see a little lower before pumping up to 119 and then coming back down even lower. This is what I shared back on the 19th. And then BTC hitting near bottom, dipped to the 112.4 range. I'm long main account with small amount. We'll add to it when it gets moving up. So I was long before it even I didn't even wait for it to go below 112. But what we do, and I also noticed some other comments here, like, and there's nothing wrong with this guy, by the way, guys. This happens, right? This gentleman here got what did he say? Salvador The floor was at 112. I was responding to someone else's comment who said it tanked last night overnight, but tanking to me would be the opposite of what it did today. Tanking would be dropping through 112 and going all the way down to 110 or 109. Right now, it didn't tank because it just held above 112. Now it did dip below 112 to 111.6, but it popped right back up, and we don't really count the wicks down unless they hold underneath the support. Salver said, you did. I had my limit order at 111.8 all day, brought it down to 110 before going to sleep. Had he would have left his limit order at 111.8, it would have got triggered perfectly. I mean, it dipped to 111.6, but it would have been, by the time he woke up, it would have been way up at 112, 113, 114. And now big into profit. Say that again. If you're not talking to me, mute yourself out, please. Okay. George, I just muted you. Let's see. Then Don asked, Nico, if BTC goes above 118 over my TP, how do I stay in the game, or do I need to get in again at market? So if it hits your TP, you'll be out, right? If you want to stay in, well, first of all, you're asking a crystal ball question, because if it goes above 118.5, like my TP was at 118.5, if it goes above 118.5, I have this line at 119 because that's where I think it's going, to 119. But I have my TP at 118.5 for a reason, because I want to front run the TP. I mean, I want to front run where I think it's going. It just in case it, wicks up to 119 and then pops down. I want to make sure that my TP gets triggered. Now, what if I have my TP at 118, like Don just asked, which is right here, 118.5. What if I have my TP right here and it goes above it? It very well could. Very well could. You want to get taken out. And if it goes up to 119, wicks up and then comes back down, once it comes back down below the 118.5 or below the 119 and holds 119 as resistance, we re-enter and short if that happens. Now, if it just goes up above 118, let's say it takes you out, you have a stop loss here, a take profit here, it takes you out and just goes above 119, holds and just keeps going. Well, on this bounce here, you could possibly re-enter here if that were the case. But better to take the profit. Now, the other thing you can do, if you're paying attention and watching, then you can just move your take profit out of the way, but you better make sure you're watching, because this is the mistake a lot of people make. They get greedy and they move their take profit out of the way because they don't want to get triggered, because they think it's going to go up higher, and it goes up just a little higher than where your TP was, and then it drops, and then you wish that you had your TP there. So
thank you. That answers my question.
Yes.
So it sounds like instead of just leaving the TP, leave the TP in and then just get in if it's still going up.
Yeah, only if it holds. Now, because it could hit 119. It could go through your TP at 118.5, go up to 119 and bounce and then start to come back down. Or it could go through 119 and you might get back in, and then it falls back below 119 and starts to go back down. And you're like, man, you're mad that you got in. So what you need to do is wait for it to go through that resistance, the 119. And 119 is the major resistance, and it needs to bounce on it and hold and make a higher high, higher than where it went through. And hopefully even hold that as support. So a lot of people, myself included, over the years, and sometimes I prematurely enter position just because I'm confident in the direction it's going. But what you really should do is wait for it to break through, wait for it to hold as support above that level, and then start to climb higher than where it broke through. Here's a mistake a lot of people make. It goes through, it comes back down and bounces, and they enter here on the bounce. And that's a mistake, because it could go up to here and then come back down and make a lower. And then what do you have? You have a high, a lower high, a lower high, a low, a lower low, and a lower low. So the best thing, the smart thing to do, and what they teach in hedge fund trading school, is you wait for it to go through the resistance or the support, depending on whether we're looking at it going down. So you wait for it to go through here, go through here and bounce. And then you want this to make a higher high. So this needs to come up higher than where it broke, where it first went through. Once it does that, then you want to make sure that it holds there as support. Once that happens, that's the best entry. That's the safest entry for getting back in. Now, does this always happen? I would say 80% of the time this will happen where it goes through and then finds support first before bouncing. But it is possible that it just goes straight through it and just keeps going, right? Then you're going to then you're going to feel like you missed out. And then you're going to jump in up here. You're going to be like, oh shit, I missed it. Should I get in now? And maybe I don't respond to you fast enough. And you go ahead and go long up here. And then as soon as you go long up here, it's hitting the next resistance level. And then bouncing and coming down. So that's why we say don't try to catch a falling knife when something's dropping really fast. A lot of you are like, oh, I missed the entry up here. Is it too late to go short here? And they don't realize that, yes, first of all, it is too late. Do not try to catch a falling knife. This is the falling knife. Right now is not the time to go short. Now, you don't know that this is the end of the drop, but that's the whole point. You don't know. So therefore, you stay away. You don't know. Don't go crawling into small little cave holes if you don't know what's on the inside. So, but if you do a little charting here, you'll see we got resistance here at 119, and then the next one above that is 122, and you'll see we have resistance here. We have resistance here, right here. We wicked up to it. We have we broke through it, and then we had support here, and then we broke through it, and then retested as resistance before dropping. So that is the next resistance level above the 119. So I would say I'm not even worried about that, or the top one, which is the 124. Not worried about that one either right now, because this would need to get at least to the 119 first. Now, if the Elliott wave plays out, which right now it seems to be, then what we might see here is, let me just get rid of some of these drawings here. I got to remember to make one drawing and not 20 little ones. And I could probably just remove all the drawings, but all right. So let's go look. What are we talking about here on this Elliott wave? We're talking about a bounce, and on the B, we're looking at 119, 119, 119.1, 119.2, somewhere in that range. And then if it cannot get through that, that would just be a continuation of a lower low, possibly down. Now this one, on this drawing, it comes down to 112. We already went below that here to 112. We bounced. We possibly will go to 119 and possibly down lower after that. That is only if it bounces at 119 and can't get through. Obviously, if we get above 119 and hold as support, then this is invalid. We don't worry about that until it happens. Right now, it's on its way up, almost textbook. I mean, this is a serious breakout. Also, keep in mind, this was a falling wedge. Falling wedges are bullish. So let's go into the help desk. For those of you that are brand new, go into the help desk, click the pin messages, go to chart patterns and cheat sheet. All kinds of different charting patterns in here, formations. This is a falling wedge right here, descending wedge, bullish breakout to the upside. But look at this. It doesn't come up necessarily to make a higher high. It comes up and hits previous support and resistance sometimes. Not all the time, but this is just an example of all the different patterns. So, but falling wedges, descending wedges are bullish. They tend to break out to the upside. Now, let's go look at another example of one. If we go to, just so you guys remember, a couple months back, this was a big one here back in January when we broke the all-time high right here, 73.8. We popped above it, went all the way up to 108. We came down, we had a big consolidation all the way down to 89,000, and then we made a run for it, and we double topped up here at 109. That was the beginning of a giant falling wedge or descending wedge pattern as well. Very similar to what we just saw. and it looked like this. We had resistance, resistance, breakthrough, support, 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 descending wedge, break to the upside. This one came all the way up. Now look where the first resistance was. First resistance, basically right here, where we had resistance, resistance, support, resistance, 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 support, support, resistance, resistance. Then we break through, we get to higher highs. So if we come to look where we are now, we had the same, almost the same scenario, guys. Like we hit 108, we come down all the way to 89 and go all the way up to 109 and then drop. Here we hit 123, we come all the way down to 112. We come all the way back up to 124, which is just $1,000 more. Just like here, we were at 108, we went to 109. $1,000 more at a big falling wedge. This falling wedge wasn't as deep. It didn't drop all the way down to 100K like it could have. And the reason why I have this line here is because if it did break the 112, that would be the next stop down here at 102.5. Because that is not only the top of the previous bull flag resistance where it broke out and had support, but it converges right here at the previous support level of 102, 102.1, 102.2. So, and not only that, but that is the depth of the M pattern. So we have a big M. You know, there's all, it's not just one thing, it's a couple things all showing at the same time. We have a big M. We take a line from the top of the M to the bottom, which is the 123 to 124 range and the 112 range. And then we just move it down here. And that brings us down to this level where we could wick through like this, but we probably find support here before bouncing out. Now that didn't happen. We broke to the upside instead in the short term, but that does not mean that this M pattern is over. Let me explain. So if we come all the way up to the 119, which is what I'm saying, and then we have an Elliott wave pattern back down to a lower low, and we get back below the 112, like we could do this, and then come all the way back down here, and then retest as resistance, then we will see that drop, and that will basically finish out that M pattern on the higher time frames. I'm not saying that's going to happen. I just want to be clear, guys. What I'm saying is I'm giving you all the scenarios, giving you all the possibilities. If this, then that. If we cannot get above 119, if we get above 119, let me put it this way. If we get above 119, we could see a climb to retest all-time highs and possibly get through it all the way up here to 124. This is the high, the highest we've ever been. And this was the 123 level, which was the previous high. Somewhere in this zone up here, once we get above 123, we are retesting all-time highs. Notice when we hit 124 here, we did not hold above 123. So technically speaking, this is considered a double top because we did not hold at all above this level. So this is technically the all-time high, this whole range between 123 and 124. The price got to 124.5, but we never held a candle above that. So, and then we drop back down, we're retesting here, and now we're bouncing.
Can I ask a question, Nico?
Yes, sir.
I've just re-entered on Bitcoin to ride it up to the 119, but I noticed this morning it didn't come back to halfway like it normally does when it pumps up. So if you've just re-entered, where would you put your stop loss at this stage?
Well, that is like, just so you know, that's kind of like catching a falling knife. Like if this drop right here was all the way down to here already, and you just now entered, then you may not, it might be close to its turning point already. If you're entering way up here on the way to 119, now I know 119 seems far away still, and hopefully it will get to 119, but when you're just entering way up here, you missed the big move, obviously. And so that doesn't mean you can't make money from here to here, but it still has to do that. When we entered down here, we already move our stop loss into profit. We're already way in profit. I think I'm up 480 on this one and 1,500 on this one. And So I move so that now, even if it doesn't make it to 119 and it just drops right now, I close these trades out or it hits my stop loss. I'm getting out in profit. So with that being said, you already did it. So let's go and look on the lower time frames here. Where would you put your stop loss? Well, it looks like we might be having some consolidation right now. And let's just look at what it's hitting. Go over here, look at where it wicked up to right there, which is the 117.2. Bring that over, and you will see we got major support before dropping through, possibly even a little bit of resistance here. And then just bring it all the way over, and you can see we had support and resistance going pretty far back. So this could be considered a major support and resistance level that we're hitting right now. Obviously, we were in a little channel here for a while. We dipped above it. We dipped below it. We went above it, below it. But in this channel, straight across for a while before falling out, we came up and hit it here, got back in it, hit the top, went above it, came back below. I mean, it's all over the place, but this is like a little bit of a zone here. And we just hit the bottom of this right now. So I would say as soon as it gets above that line to 117.2 and starts to climb and hold above it, I would move my stop loss probably underneath that line. Now, right now, if you want to know where to put your stop loss, I would say if you just entered, you see what's happening here, guys. It hit on the lower time frames. It hit that resistance level that I was just talking about, and it is starting to pull back. But where is it pulling back to? Look at here. We hit a ceiling right here. We wicked up, and then we come back down, and we pumped up right here. Hit a ceiling again. The next wick, wicked up high, came back down. The next one opened up, wicked up high, came back down. So right here at 115.8, there is something. That's probably where the support will be. It could be between there and the tops of those wicks, but let's just move it there. And we're hoping that it holds above this line. What is this? Let's go back and look. This is the 115.8. Well, look at that. Resistance there, support there, resistance here. Support, resistance. We got resistance. This is all you see the wick down. So that's resistance. Also, if I zoom in, you'll see from this wick here to that one to these up here, that's pretty much a price range or a zone. So what I'll do is I'll come up here and I will get a parallel channel and I will just bring it from here and just drop it to there, from this wick to that wick, right? And if I just bring this over, you'll see it pretty much encompasses that support, this resistance, and just keep going back. This is just charting. Basically, this is just how I determine where the support and resistance levels are. As you can see, it goes back. There's way more back here too. We got now right here, you might say, well, yeah, but this just went right through it. Now let's zoom in and see what happened here. We came down to it, support, we went through it, went back up to it, resistance, went through it, support, resistance, support. There's something here, obviously. And obviously if I just keep taking this all the way back, guys, it just becomes more and more obvious that this is the way it is. These are the support and resistance levels going back quite a ways, all the way to, there's obviously something going on here, even when we came up for the first time back in July to these levels. So let's just go back to where we're at right now. This is the left side of the big M that I was just talking about. And this is the middle, and now this is the right side. And we are possibly just going to wick down and touch that level before bouncing out. That's what we want to happen. We hope that happens. This could be, a lot of people are going to look at this and say, isn't this a big bull flag? Maybe. But we are coming up against major resistance at the 119. We haven't got there yet, but let's just say this is a bull flag right here. Another little falling wedge. How much higher will it go? Let's just take it from here. Just for the sake of this.
It's raining, I think.
It's what? Talking to me? It's raining. Yes, it's raining. That would bring us up to my TP at 118.5. And if we really come down, 118.5 right there. I mean, let's just take it all the way to 119 and see how far. What is this? Huh? Let's just go all the way down to where we broke out. This is where we broke out right here. Serious pump to the upside. If we hold support here and bounce up, it could take us right through 119 all the way up to 120. But now this is where people will be like, oh, it's breaking through. I'm going long. This is where you need to wait. This is where you need to chill, because that Elliott wave could still be in play and it could just drop right back below 119. So you got to make sure that it holds the support above this level. Generally speaking, we don't get through a major support and resistance level without any resistance whatsoever, meaning we will probably hit it and bounce a little bit before going through it, usually. Very rarely will we just drop right through it. In other words, like this, we will hit it, boom, bounce a little bit before going through. We don't just go right through major support and resistance levels. Now, there's a couple ways to look at this. We had a big pump during Powell's talk, and then we had a rising channel also. Let's just look at it this way. Let's get rid of this and put this here and move that to here. This is a rising channel, rising narrowing channel, and that is bearish, and it did break to the downside. But where is it breaking to? It did get above this resistance level, and it possibly is just coming down to retest. So I'm not gonna put too much energy into that, because it's not up against major resistance. Well, kind of is, actually. I shouldn't say that. It is up against resistance. So a lot of times whenever you have, even if this was a bull flag up against resistance, it doesn't always mean that it's going to break to the upside. So we got to be careful though. That's why we wait. I mean, I'm still in my open positions. I'm still long. In fact, I'm going to go down here and let me just see. I have a stop loss somewhere at 114.7. Where is it? Oh, that's because I'm on BTC USD. Let me go to BTC USDT. My stop loss is already in profit here, but you know what I'm going to do? I'm going to move it up even further. I'm going to move it up to underneath this line right here. This is the zone I just drew out. I apologize, because this chart here on this pair looks a little different than the one I was just drawing on. So I got to reconfigure all this. But let me just go to a higher time frame and see what it looks like. Yeah, this is another issue also, guys. I said we were coming up to the 119 right here, this blue line, and I forgot about this, but I have it on this chart. This is the upward trending support line going all the way back to when we were down here at 74.5, this yellow line. And as you remember, I talked about this the other day. I had this blue line on here at 119, and I said that if we break back above this overall channel, we need to come up. We'll probably hit that. We'll hit this previous support as resistance, right where that blue line is. That's probably, I mean, if I were to guess, that's probably what's going to happen. Boom, right where those two converge. And if it cannot get back above that line, which also means the 119, if it cannot get back above this major support going all the way back to 75K, and it bounces as resistance here and drops, it could come back down to the 112 and further. Obviously, that could happen. And there's a couple of things happening here. We do have a big M pattern that I was telling you about, and that M pattern could stay an M pattern even if it comes all the way up to 119 before coming down, but it also could turn into this where it just comes up It goes up a little higher, goes up a little higher, going sideways while it's doing it, gets over here, hits 119, or maybe it comes right up and wicks right through 119 and hits this upward trending resistance line, so what used to be support as resistance, and then falls back down, getting very close or basically equal to the left side, which would then create a giant head and shoulders on the daily. Boom, 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 boom. Head, left shoulder, right shoulder. If that happens, again, if it gets above 119 and gets above the yellow line, we're back in action and we're going to all-time highs. But if it can't do that, it doesn't mean it won't do it in the coming weeks. It just means right now it still has some downward consolidation to do. So, I mean, I know that sometimes you guys get stressed out or it's frustrating, but once you really come to terms with what trading is, it's not what you want it to do. It's what it's doing and how you react to it. I don't know if most all of us have been in relationships with girlfriends, wives, boyfriends, husbands, whatever your thing is, but we've all been in those relationships where we're frustrated with the other person because they're not doing what we want them to do. They're not acting the way we want them to act. And that can be frustrating because in our mind, we have this ideal image of them. We created in our imagination, we created this ideal version of them, and they're not complying with that. And it's pissing us off, right? And then we take it out on them and we argue with them and we fight with them. But really, you're the one that created that ideal image of them. They didn't. They're just being the way they always have been. And you're getting mad at them for just doing what they've always done. Just because they're not changing or conforming with your ideal image, which is short for imagination, you're imagining them to be a certain way, and they're not. And then it starts fights and conflicts. Okay, this is not obviously a relationship call here, guys, but this is how everything works. We create these scenarios in our head, and then when someone else doesn't do what we created, we get mad at them instead of just sitting back and saying, oh shit, well, that didn't work out the way I wanted to. Oh, well, this person isn't the way I want them to be. It's my fault for expecting them to do something other than what their nature is. They're just being themselves as they were when you met them, but you're trying to get them to do something different than their nature, and that's in your imagination. And so this starts conflicts, divorces, fights all the time. And most people never take accountability or blame for it themselves. They blame the other person. And the truth is, it's not them doing something wrong. It's them doing something against your imagination of what they should be doing or what you created in your mind. So same thing with trading, guys, to round that around, to bring that back around to what we're doing here. Sometimes we hope for things to happen on the charts. We imagine, man, if this just goes up, I'll make $10,000. If this just breaks through this, I'm short right now. And I have my stop loss up here. I'm going to go to sleep. I hope when I wake up, it's way down here. And it doesn't do what you imagined it to do. And you blame the charts. You blame the algorithms. You blame the whales. It's a conspiracy. They're stop loss hunting. We're basically projecting our fears, our dislikes, our frustration onto an inanimate object that is doing what it does. And it's just not complying with what we wanted it to do. So therefore we get aggravated and frustrated. So this has saved me in relationships, guys. I actually ruined some relationships because people weren't doing what I expected or wanted them to do because they weren't living up to my expectations of their potential. But their potential was just my reimagining who they were in the ideal way that I wanted them to be. And when they didn't comply with that or didn't do that or didn't act that way, I was mad at them. And so therefore those relationships ended. But later on, I learned what the problem was. It wasn't them. It wasn't me either. I wasn't the problem. It was my imagination of them. It was how I wanted them to be. And they weren't that way. They weren't that way when I met them. I couldn't make them be that way. And I should have just, either ended it, never got in the relationship to begin with when you're with somebody who isn't doing what you want them to do or doesn't act the way, like if they're acting in a way that's always going to aggravate you and frustrate you, you're not going to change them. You knew this when you got into the relationship. So the sooner you learn this in trading, in relationships, anything else, the more you'll stop being upset with the other person, the more you'll stop being upset with the charts. And you just realize that it's going to do what it does. And all we can do is either react positively or negatively, but we should not let it hurt us or bother us. And if you don't like it, then you can either two things: stop participating, meaning don't be in the relationship anymore, or understand human nature, understand the charts. And so I don't like, for instance, when I'm sitting on my hands down here and I give a signal 2 days ago to go long at 112 because I'm expecting the bounce. If it doesn't bounce, you guys notice I always say this: if it bounces here, we're expecting it to go to 119. If it falls through and holds underneath here as resistance, it will drop much further all the way down to here. I'm okay either way in my head. I've already come to terms with one of these two scenarios happening. And I'm okay with either one. I may already be in a long position expecting it to bounce up, but I will immediately take the stop loss and reverse my position if it does the opposite thing. And that's kind of how you have to, that just takes experience. It takes time. It takes, I always give analogies. You guys know that. It's like if you just take off your shoes and socks right now and go walk outside in the street, go walk down the sidewalk, go walk in the gravel, go walk on the side of a dirt road. And what's going to happen is you're going to be, ow, ow, ow. Your feet are going to be hurting. You're going to be stepping on little rocks, right? You're going to be scraped up and cut up, and you're going to be like, oh my God, I can't walk out here. But do that every day for a couple of weeks and watch what happens. Your feet become callous. It doesn't hurt so much anymore. And before you know it, you can run around in the street. I remember when I was a kid, I never wore shoes for like 5 years straight. I was out running around everywhere with no shoes. My feet were like, I could walk on hot coals. So that's just what happens over time. And I think that's also what happens in relationships. People over time, they accept whatever they have, and then we call it a comfort zone. You get in your comfort zone and you're complacent, and it may not be comfortable. You may not like it, but you're used to it, and you know what's going to happen next, so you just deal with it. And I think some of you keep making the same mistakes over and over and over again in trading. Someone said earlier, I can't remember who it was in the chat, and I'm not going to name any names or call anybody out, because guys, we all go through this. We all have this happen to us. I've taken 20 some trades in a row, and I've lost on 15 of them. I don't know what I'm doing wrong. I'm following the signals. And sometimes people basically call themselves out right in that comment. Well, they'll say, I took 22 trades in the last week and I lost on all of them. I don't know what I'm doing wrong. Well, first of all, I don't know. I only gave one signal in the last week. So if you're taking 22 trades in the last week, you are over trading. You're doing something wrong. Now, if you're taking signals from me, Chad, and every other comment you see in the trade chat, then you're going to be over trading, guys. You're chasing trades is what it's called. You're running after things. Oh, well, this is moving up, I'm going long. Oh, this is moving down, I'm going short. Now, if you're specifically just taking my signals and you've had 10 losers in a row, then we need to talk, because I haven't. So something's going on. Something's going on where either you're not moving your stop loss into break even or profit, because my trades don't always hit the TP. That's for damn sure. The TP is not necessarily there to guarantee that it's going to be hit. It's there because that's the next resistance level or the next support level. And that's where it can go up to before it has a big pullback. But as soon as I go into profit 15, 20%, I move my stop loss to break even. If it falls back below where my entry was, I'm taken out in profit. May not be a lot of profit, but I'm not losing. And now, are there some times where it will drop below my entry and hit my stop loss before I've had a chance to move my stop loss into profit? Yes. Those are the small little losses that we have. But if you're doing that and you're getting stopped out, and then it turns on you and goes the exact way you wanted it, and you're losing a lot of money because of that, then you are risking, you have your margin too high and your leverage too high, because you shouldn't be losing, even if it hits your stop loss. let's just say 10%, for instance, hypothetical, guys. Let's say you have $1,000 at risk on the trade and you put your stop loss at 10%. That's $100. Now you're risking $100. Let's say you have $10,000 in your trading account. Just for this example, doesn't matter what you have, but let's say you have $10,000 in your trading account and you risk 10% of that on a trade. That's $1,000. And then you put a 10% stop loss on that. That's $100. So what is $100 to $10,000? That's 1%. That means you're risking 1% of your entire account balance on that given trade. How many times can you lose before you wipe out $10,000? 100 times in a row. You could have 100 losing trades in a row, give or take, because of the fees, before you go through your entire account balance. So if you got $10,000 in your account and you burn through $2,000 or $3,000 in 2 or 3 trades, you're doing something seriously wrong. And you need to get help first before you keep doing it. You need to get on a call with either Bill or on this call right here and show me, ask the questions if this is happening to you, or book a one-on-one call so that we can get to the bottom of it, because there's no reason for you to go through and lose a lot of money before you finally learn what you're doing wrong. But you should be risking, especially when you're not consistently profitable, especially when you're new, especially when you're just trying to learn this. You should not be risking a lot at all. Even if you do have 10,000 in your account, you probably shouldn't be risking 10%. You should be risking 1 to 3%. Okay, you got 10,000 in your account. Go along with $100. Instead of trying to make $1 million on the next signal just because Nico should know what he's talking about, and even though I don't know what I'm doing, I'm just going to do what Nico does because he's supposedly an expert. So if he's expecting this thing to go to 119, I should make, I'll just go along with $10,000. I should make 25 grand on this trade. Because if you think like that, it's going to be the time when I am wrong, and you're going to lose a lot because I'm not right all the time. That's for damn sure. And I'm certainly not risking that much. Let's just look and let's just show you. I'll just show you right now. I'm very transparent. Let's come down here to the bottom, right down here on this long position on Bitcoin. I'm trading with 28,000 contracts USDT, but my margin is only $1,400. Now I'm already up 36%. I'm up $538 on this trade. What is that? Percentage wise, that's 36%. So I could close that out. Now down here on Ethereum, I'm risking 18,000 contracts USDT at 14x leverage, but I'm really only risking 1,200 of my own money. But what percentage of this margin that I am risking is my account balance size? It's less than 10%. So and then not only that, but my stop loss, let's go to Ethereum and look. My stop loss is already in profit. So I'm not risking anything. If this thing turns and comes back down, I don't lose a dime. I make money. Now on this one down here, I did this on the live call last night, I think. I can't remember when I did this. MYX. I was giving an example of how to find trades that are not correlating with Bitcoin. So what was happening here is I went up here and I was just scrolling down and I found one that was negative, it was 26% down. I was like, what is going on with this one? So I went and looked at it and I just gave an example of how to enter this trade. Now you can see my entry is here. This is in a giant widening wedge. It came all the way down and bounced and it's starting to climb. So I went long and I am negative on it because look, it was up here right where my entry is. And then it pulled back before. So far it pulled back. But if I go to the lower time frame, let's just see what's happening. I went long here because it was breaking a higher high. It was starting to curve around, creating what I thought was going to be a nice little cup and handle, and there might be a little bit of a pullback. Well, this pullback came all the way down to here, so I did go negative. It's got to come all the way back up here just for me to break even. But my stop loss, guys, is right underneath. I just really, look at this. It just came right down to where my stop loss was. It didn't even trigger it. Boom. It didn't even trigger it. It looks like it almost touched it. But I put my stop loss right under these wicks right here and right where this resistance level was. And it just came right to it. So if you think there's stop loss hunting, I assure you, why didn't this get triggered? It just came right to it. and turn. So what I'm expecting, I'm hoping this gets back up. Now, this is a coin I don't know anything about. I was just basically giving an example of how to go long on the call, and I just stayed in it overnight. When I woke up, I'm $700 negative on that trade. I was risking $561 and our 5,000 contracts at 10x leverage. So I'm taking the wins with the losses, but I didn't close it out. So to me, it's not a loss. This is called unrealized losses. Unrealized losses because I didn't close. Now, if I close this out right now, if I just close it out and take the loss, then yeah, it's a loss. But with these two trades, I'm still up $1,376 total, counting all three of these. So even if I close that out, but I'm not going to close it out because why? Because, well, I mean, it is bouncing on this lower, I mean, these lower lows. It is bouncing on this resistance, I mean, support level. And so far, if I just go back and look at history, every time it has done that, it climbed up to the top and it just came all the way down here and bounced, and it's starting to come up, and it hit its first resistance level, which was this level right here. So, if this does go all the way up, back up to the top, I'll make, a huge 88% on that, but I'm at 10x leverage, so that's 800%. So I will turn that $500 into $3,000. And I'll move, and once it gets back up to here, I'll move my stop loss up to break even or in profit. Now, if it keeps dropping down, it's going to hit my stop loss and take me out with a small loss, but that's okay. I'm okay with that. That's the thing. I don't go complaining in the chat. Oh my God, my stop loss got hit. I can't take this anymore. It's so frustrating. No, guys, this is just part of the deal. If you have a business, I know a lot of you are business owners and entrepreneurs. If you make $100,000 in a year or a month or a day, whatever it is, to whatever level you're at, but it cost you 20 some $1,000s to make that $100,000 because you have to either buy inventory or you have to buy equipment or you have to do something. You have to pay your employees. And after you, so you grossed 100 grand, you minus all your expenses, 20 grand, and you netted 80. Does that mean you lost 20 grand? No, that's just part of doing business. So in order for me to make 10 grand in a week trading, I'm going to have $2,000 or $3,000 probably in losses. I'm going to make 13,000, but when you minus out the losses, I netted 10. It's just the way it goes. And so now, if you have a bunch of losses in a row, I can certainly understand how that can get concerning. But your losses in the beginning, guys, when you're learning how to do this, your losses should be small and until you become consistently profitable. And then just like a business, you don't go spending $1 million on ads until you test some ads first, right? So you're running some ads, you test them. You find some ads that work. You get sales from those ads, right? You're running ads. It's getting you customers. It's getting you leads for your business. You convert those leads into customers and you count up how much you made from the ad and how much the ad costed you, right? If the ad cost you $1,000 and you made 10,000 from running that ad, then scale that ad. But you don't go spending 10 grand on an ad you never tested yet or scaled yet. So you start small. Same thing here. You start small until you become consistently profitable. And then once you know that it works, once that ad works, once your strategy works, once you know how to go long, go short, how to move your stop, know when to enter, sit on your hand. I'm sitting on my hands a lot more than I'm trading, guys. What does that mean? That means I'm not trading more than I'm trading. I'm not in a trade more than I'm in a trade because I'm waiting for proper trade setups. I'm waiting for the right time to pounce like a lion in the tall grass in the Serengeti, waiting for the gazelle herd to run by. I'm not just going to run out there and get trampled by them and get kicked in the face by a herd of gazelles running 100 miles an hour. I'm going to sit there and wait until I see the precise opportunity to strike. I'm going to sit there and wait for the baby or the elderly or the one that's strayed away from the herd. I know that might sound a little graphic to some of you, but this is nature. This is the way it works. And if you want to be a successful hunter, if you want to be a successful lion and not over there starving with your ribs showing, you better learn how to hunt. If you want to be a successful business owner, you better learn how to run your business successfully, right? And I'm only imagining that the reason why you guys are here is to learn how to make money, to learn how to hunt, to learn how to become self-sufficient, to learn how to get rich or to make a lot of money. Because the people who don't want to do that, the people who don't want to work, they want to be lazy, they just want to be taken care of by someone else. There's nothing wrong with that if you got someone to do it for you, but they're not on this call. They're not paying for this kind of education.
Nico, can we look at XRP, please?
Yes, sir.
Thanks.
I mean, if that don't look just like Bitcoin, I don't know. Correlation. Now, remember also what I told you the other day, and probably every week throughout the last several years, is that whenever we have a giant bull flag above that broke above major support, and it comes down and hits, and we created this bull flag, right? So here's the bull flag. Let's just look at it. Here's the pole from the breakout down here, let's just say. And here's the flag. I'm just going to change the color so it's all equal. So it all looks the same. So this blue flag. We hit the top, we hit the bottom. Hit the middle, hit the bottom. Hit the middle, broke through, hit the top, hit the middle. I always say that before we have a big breakout to the upside, which is generally the length of the flagpole, we usually hit the top and come down and bounce on the center line first before the breakout. And that little action right here of hitting the top and coming down the center line usually follows the dip below the flag. Let's just go. I mean, I can show you this on Bitcoin over and over and over again, but usually we come down and hit the bottom and we go through it. We wick through it and come back up. That's the low point. That's the resistance. And then we come up and hit the top and we come down and bounce on the center line a lot of times before breaking out to a new all-time high. Now, this center line just happens to be at the same support level. But as you can see, it's coming up now to the top of the flag. This is a pretty sharp breakout, just like Bitcoin, of a falling wedge right down to this support level. And it also just so happens to have not only hit this bottom support level, but right here on the center line, bounced on it perfectly before breaking out. And then look what it's doing. See this purple line here? It hit it as resistance, and now it's climbing through. What is that? That was horizontal support and resistance going all the way back to July 11th, right here, when we wicked up and hit it. Boom. Resistance, resistance, support. Pump all the way up, support, 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 support and resistance, resistance, support, resistance, support, 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 breakthrough, breakthrough, support, support, breakthrough, resistance, resistance. Oh, it just went right through it. And now support. It's holding above. These candles are above. This is the 1 hour chart. So we've had one, and now this is the second candle above that purple line. So in my opinion, yeah, we're going to come to the top of this bull flag and we're going to hit it right here. Now, the question is, are we going to go through? If this is the time to go through, I wouldn't be surprised because we only came down to the center line before bouncing. That's generally how it works before a breakout. Generally, before a breakout of a giant bull flag, we usually hit the top and then come down to the center line and bounce out. So did you have a specific question about XRP? But that's my prognosis on this. So let me just go look at my XRP. No, I should have got an XRP on this breakout as well. Actually, I might have been in it, but I might have had my stop loss too low below the center line, and it probably got taken out overnight. Can't remember. I thought I was an XRP. Because if we go into the channel here, we go into the trade signals, I'm pretty sure I had an XRP. Here it is. XRP went long. And this is what it was looking like. You can see there's my stop loss. Look at that. My stop loss was at, I don't even see the price that it was at, but it was hitting that center line, and I think it came down a little further first before breaking out. But you know, now we're way back up here. We're way back up here right now. So I didn't I had my stop loss at 280. So where did it bounce down to? 278. Bam, look at that. My stop loss was just not low enough. Came to 278. Right there, look at that. 278. So it happens to me too, guys. I get stopped out too. My stop loss was too close. I should have had it under this whole thing. But the way I look at it is I like tight stop losses, because if I get stopped out and it just so happens to be the time that it is going to continue down, I'd rather take a much smaller loss. If it is not the time that it's ready to go down and it just wicks down and stops me out, I can always re-enter and make up for whatever I just lost on the way back up. I just didn't re-enter this one because I was already in trades. I was already in a bunch of them here. And I was probably distracted from the live call last night and wasn't paying attention. So, are you in is anybody in a long still on XRP?
Yes, I'm in 4 longs, 4 sub accounts. So
Okay, Steve, was that on my signal the other day?
no, I did that independent.
Oh, okay, so you obviously you didn't get stopped out here, so good for you.
No.
Good job. Yeah. Well, hopefully you got in down here somewhere and not just if you just got in right now, or anybody just got in XRP, just keep in mind we're coming up to the top of the flag resistance level. So it is possible to hit that and come back down. But because this just happened here and we bounced on major support along with the center line, it is a good chance that we finally break out. That's what we're hoping for here. Since I'm not in a trade right now, I'm not going to enter right now. I'm going to wait for it to break out, because if it breaks out here, then we're going to see, you know, a run back up to all-time highs up here, at least in the short term. Hey, Nico, your office looks like you have a black light on. No, I mean, I do have some mood lighting around, but I have a big overhead light on. Doug, BTC appears to beginning a parabolic run. How do I add in contracts? What is Friday at the end of the day Pacific time? What is Friday at the end of the day Pacific time? I'm not sure what you mean by that, Doug. You might have to come off mute and ask, because there is no ending of the days with crypto. It's 24/7. I don't know what you mean by what is Friday at the end of the day. Pacific time would be 9 p.m. Eastern at the end of the day.
Yeah, well, I've heard in the chat and everything that certain market closures are at the end of the day on Friday, and it's best to be, if you're day trading or something, it's best to be out of it.
Yes.
That was the question. And then I've been watching this the Bitcoin taking off. I actually moved my stop loss up to like $200 too high, and I got taken out, and I re-entered. But it looks like it's going up. But I watched everything else you said about going up to 119. So my questions have been answered.
Okay, no problem. And just so you know, just for clarity, the market closing at 9 or 4, 4 or 5 in the afternoon on Friday and opening back up on Monday, that is specifically just the stock market, not the crypto market.
Yeah. Okay. Well, and part of the reason I was wondering, because everybody, you've also talked about the weekend trap and all that good stuff. And I just wondered how that was affecting this.
It's important for the market maker method to pay attention to the market sessions and the way they work.
Market sessions, and Bill can explain this, market sessions are different because the market doesn't close. It's open 24/7, but there are different time zones around the world where there are sessions, what they call market sessions, where you got the Asian market, the European market, the US market, getting active at various times, at various different time zones. And so, like in China, for instance, when they're waking up in the morning, they're looking at their charts, they're looking at what happened overnight, just like we are. And there's a lot of action that happens. Same with the Australian, the European, the Asian markets. Bill can explain that probably better.
Nico, is there a chart that shows like what those time zones are, what time the places become active?
Yeah. Pinned in trade chat and pinned in the strategies channel. Nate was kind enough to give us a cheat sheet, but in trade chat and the pins is
trade chat,
a couple different versions.
Pinned messages.
Perfect.
You've got key trading times
market
right
makers,
there.
Session cheat sheet. Yeah. So here's the different zones right here, guys. If you go up to the pinned messages in the trade chat, in the help desk, guys, there is so much so much
There's-
help, support, and information. Just go up to the pin messages and scroll down, and you'll see this is the trade chat that we're in right here, but there's all kinds of links to different things. Now, if you go to the help desk and then go up to pin messages, it's just a plethora of different things that you can go and look at. CoinGecko, this is the liquidation heat map, chart pattern cheat sheets, candlestick pattern cheat sheets, toolkits, fear and greed index. Let's click on that and see what's going on. The fear and greed index. Okay, well, right now it's neutral, is what it's showing. That means that it could go either way. A lot of times when there's a high amount of greed, we're reaching a top in the market, and there's high amount of fear, we're probably at the bottom of a market. And let's look at some indicators as well and see what's going on here. But on Bitcoin, on the weekly, we do have a little bit. I mean, we did bounce on the 112, and we do have a little glitch in the matrix right here. We have some blue line going sideways here, and it is possible to cut back above. And if it does, this would just look like this, where we have a high, a lower high, a low, a lower low, and we could pump all the way back up to 124 and still kind of be in this falling, widening wedge on the RSI. Here's an example of that happening. I can go back and find, actually, that hasn't happened like that in a while. But here it is happening on the reverse. So we have a price going down on a bull flag right here. And we have a very similar thing happening here where we had higher highs, higher highs, higher highs. And then higher lows as well. It's bullish divergence. And then we broke to the upside. This would be, just zoom out and look at this. A little different this time. We got basically the same thing happening on both. We do have like a big falling wedge or bullish flag. If we go down and look at it on the lower time frames, falling wedge. You do have a couple other bearish patterns happening, which is the falling wedge. I mean the M pattern, or possibly a head and shoulders in the making, but we don't call this a head and shoulders until there's a shoulder over here to call a shoulder, and it has to drop back down after that. So I don't like to, some people will post in the group, hey Nico, is this an M pattern or head and shoulders? And the chart will look like this. And that's what it will look like. And they'll say, is this an M pattern? And they will actually draw an M. No, that's not an M pattern because this hasn't done this yet. So you're projecting what it would look like if that happened. Once this actually does that and then does that, then yeah, you can call it an M pattern, but it's not necessarily an M pattern in the making just because you see what looks like a half of an M. So be careful with wishful thinking or trying to imagine or trying to see something. It's like looking up at the clouds and seeing an elephant. Are you really seeing an elephant, or is it your brain trying to connect patterns and make you see what you want to see? This is an M pattern, though. That's for sure. We do have a big M pattern on 1 hour on the daily. And it did bounce to 112, and we did break out of the downward falling wedge to the upside, which this is bullish. And we are projected to get up here to the 119 level. we're hitting 117 as resistance right now. If we get up to 119, which is right here. It could come back down. It would be more like that. This one right here, I'm going to get rid of. This is not. Be probably right here in the 110 zone. Unless we get above 119 and hold. Steve, good question. When Nico says set stop loss at 10%, does that mean set the stop loss below the entry at the amount of 10% of the margin being risked in that one trade? Here's how I do it. Let's just go to an open. Let's just go to a potential. Let me go down here to the 10-minute. Let's just say I was going to place a trade right now, which I think I will. This is BTC margin. I don't have any open positions. We are bouncing on that level that I just drew, that I just showed you guys right there. You see the tops of these wicks. Boom. Let's just say I want to go long. I'm going to put my open position right here. And don't worry about my percentage size. Don't do what I'm doing. Okay. 25x leverage, 25% long. Okay. I just entered a long position. I did not put my stop loss yet. So what I do is I come down here to BTC USD. This is the one I just entered. I'm going to come here to TPSL, click it. And what I do first is I click on percentage ROI. I don't type in the price of the stop loss I want it. I put percentage ROI, click on that, and I just bring that to 10%. Boom, confirm. It puts my stop loss on the board, but then I look at it and I say, you know what? That might be too close. I want it to be under the support. So I'm just going to move it down a little bit to, I don't know, there. Now, when I move it down a little bit, I come back and look, where did I just move it to? Let's go back up here, click edit. I moved it to 13%. Because 10% is just to get it on the board. So I get it on the board, meaning if this thing just drops like a brick through a wet paper bag right after I enter the position, I want to be taken out quickly. I don't want it to just go way negative and me make a big mistake, right? Because anything could happen. I could be entering that position at the same time Trump is speaking, saying that we're shutting down everything. Something could be announced that I'm not aware of, and we could see a huge move very quickly right after. Has that ever happened to any of you where a huge move just happens immediately after you entered a position and you're like, what the hell just happened? If it hasn't happened to you yet, it will. And so I immediately, when I enter, usually when I enter a position, I immediately go and put a stop loss in, and I always just put it at 10%. But when I go and look at where that is on the board, because I don't analyze exactly where that will be before I enter it, that's just me. I'm lazy that way. I'll just get it on the board, 10%, and then I'll go and look at it. And if I see that it's right above these wicks where these resistance is, or where the support is, I will move it below that just to get it out of the way. Even better, I'll move it down below this whole thing right here, just for now. Okay. Now, if I go and look at where I just moved it to, I moved it to 20%. Now, why don't I just put on the signal, put your stop loss at 20% instead of 10%? Because I don't know where that's going to be for you. It depends on how much you're risking on the trade, what percentage and what leverages you have. Where is that going to show up? Now, if I put an exact price on the signal, put your stop loss at 116.0001. Let's say I put that on there. Okay, well, that's an exact spot for sure. But if you got in 10 minutes after me or 5 minutes after me, and you just do a 10% stop loss, your stop loss is going to be at a different location as mine, right? So it probably would be better for me to put an exact number, like put your stop loss under this whole zone here at exactly 115.645. For me, that's 20%. But for you, that might not be 20%. That might be 50% for you, or 60% or 30%, depending on where you got in, because you're likely did not enter the exact price that I did with the exact amount of margin and the exact amount of leverage, right? So, or the exact, I mean, your numbers are just going to be different. So I generally say 10% because it's 10% for you, 20%. But when you get it on the board, there is a more precise way to do it, guys. And another way to do it is what Chad teaches and what Bill teaches in the basics calls. You can ask them. You come over here to the tool section and you go to the fourth one down, 1, 2, 3, 4. I have them starred so they're at the top. But you see here, long position, short position. Click on long position. Before you enter the trade, you can see this is where I entered. But let's say I was getting ready to enter right here. I would just click it right there. And it's going to put this on the board. And then I'm going to adjust this. Right now it says risk to reward ratio 1-to-1. That's not good. I don't want a 1-to-1. So I'm going to move this up to where I think my TP is. So let's just say it's 118.5. That's going to change my risk to reward ratio to 1.74. That's still not good. So I'm going to move my stop loss up to where I think it should be, which would be here. That's a 3-to-1 risk to reward ratio. So I would put my stop loss below this red line right here. Okay. But if Nico says, or Chad says the TP is right here, and it's right here, you're not going to find, that's not a good risk to reward ratio unless you put a very tight stop loss right underneath this. And sometimes that gets triggered. Sometimes it gets hit because it's not done consolidating first before it goes up. And then you get mad. But the truth is, guys, is that this is not a good trade unless you have a really tight stop loss, because that's too close to the TP. So what you want to do is wait. Don't get in this trade. Wait for it to go up and hit the TP, wherever he said the TP was. Wait for it to get up here first, and then decide, is it going to hold and go up higher? Then you can enter here. Is it going to just hit this and fall down? Then you will short it here and write it back down. So this just comes with experience and testing things out and getting on these calls and understanding this. This is not something you're just going to figure out on your own overnight. But the reason why I don't give exact TP, telling you to put numbers at the exact spot that I am, is because all of our metrics are different. Sometimes my margin's different, my leverage is different. And I don't want you to I want it to be 10% away from your entry, 10% away for your margin. And just to get it on the board, by the way, okay, once you get it on the board, look at it. Is it right here? When you put it on there, is it right here? That's not good. You need to move it below the most recent liquidation zone, which is right here where these bounce. It needs to be below that. It needs to be out of the way. Now, if you just move your stop loss way down here out of the way, yes, it's less likely to get hit. You might say to yourself, well, doesn't that make sense? I don't want to get hit. That does make sense only if it continues to go up. But if it falls back down, and then it would have normally hit your stop loss right here, but you don't have it there. You have it down here now, and it drops while you're not paying attention all the way down to here. And you finally decide to close it out, you're going to take a much bigger loss than you would have if you just would have let it hit your stop loss. That's why we call it a stop loss, because it stops your loss. You can trade with no stop losses, guys, and you will, and I guarantee you, if you never use a stop loss, your stop loss will never get hit. I can guarantee it. If you don't use a stop loss, your stop loss will never get hit. But what will get hit? Your liquidation might get hit, or you're going to close a trade out in a huge loss when you realize it's not going the right way. Either way, you're going to take a loss, but your stop loss won't get hit because you don't have one. And you can trade like that for a while. And if you're really determined, you will trade like that for a while until you finally learn the lesson. But some people trade like that and don't learn the lesson, and they just quit and give up. Yeah, go ahead.
Is there a way to set the stop loss prior to putting in the trade, so that way you don't have that minute or two in between where you're not trying to catch a falling knife?
Yes. So when you're placing the trade over here, you determine your, whether it's a market order, you determine your leverage, you put your percentage in, and right before you click the long button or the short button, depending on what the trade is, right underneath that, it's going to say TPSL, and you can adjust it here before you actually enter. So I can't here because I'm already in the trade, but let me go to a chart that doesn't have it trade open, and I'll show you. So this is Solana. I mean, everything pumped out of it. Look at this. Solana was in a falling wedge, just like Bitcoin. A nice one. It broke out, retested, bounced, and then popped up. So that would have been a good entry. In fact, I think I was in a Solana trade on the last call. I moved my stop loss and a profit somewhere. I think I did it here when it bounced and it came down and took me out. But just premature. Now, if I was paying attention, I would have got back in. But I can't pay attention to everything, guys. So that's why I stick to Bitcoin and Ethereum and XRP. I don't have the brain space to watch everything. But obviously, the opportunities are everywhere. But let's just say I'm going to take a long position here. Let me get rid of this. This is probably where the breakout will go to. Why? Because this was the length of the pole. This is the breakout. The pump probably coming up to 205. Let's just say I was going to go long right now. I would set this right here. And just to answer your question, you come down here, you got the amount that I'm going to trade, 5,100 contracts. I'm 9x leverage, market, and then right before I click the open long position, I click TPSL right here. And I type it in. And then click open long, and it will put all of it on the board all at the same time.
Thank you, sir.
You're welcome. Joseph, if we break above, well, this is Joseph. This is someone else says, if we break above 119 on BTC, where would you add contracts? I would not, because breaking above it doesn't mean it's going to hold above it. You want it to hold first. Now, that's a different. Now you might have meant that, but let's just go back and look. I mean, man, look at man, Solana. This is where do I think this is going? The problem with trying to catch, this is like catching a falling knife in reverse, guys. Here's where your greed factor kicks in. Greed will kick in right here. And look at this. Resistance. Resistance. We wicked up to it. We wicked all the way down here and came all the way up to here. Bam. And then went further down. So there's something there. Let's bring it over. We don't have far to go. I would not get in this right now. I would wait for it to break above. So when you say this is just let's just pretend this is Bitcoin. If Bitcoin gets above 119, when do we add contracts? Well, I would wait to see if it holds first, because it could go like this. It could go above 119 and then fall right back below. You want it to go above and then hold as support and then start to climb. So right here is where you would add contracts as soon as it gets above where it breaks out. So if it breaks above, comes down and catches support and bounces, you want it to get above where it went when it broke out. And you also want it to hold there as support, preferably. Now you might say, yeah, but if I wait all that time, I'm missing all of this. Yeah, but here's the problem with not waiting. And this is what you learn from being patient over time and learning and understanding this stuff, is that if you don't want to miss out on this potential gain here because you waited for it to get above a certain level, this is what happens if you don't do that. It goes above, it comes down to retest. You enter here instead because you don't want to wait for it to come all the way up to here. And then it only goes up to here. It doesn't make a higher high, and it ends up making a lower high and then a lower low, a lower high, lower low, lower high, lower low. And now you have a downward trending channel again. So you got in here and then boom, it drops. Now you're negative and you're like, what did I do wrong? Well, listen, there is I've done it. I do it all the time. Sometimes I will enter here because I'm too impatient to wait for it to get up here too, because I think that it is time for it to finally break through. But when I do it, even though I know I should wait, when I do it, I put a very tight stop loss. And sometimes when it starts to come up here and I see that it's struggling to make a higher high, I'll just move my stop loss to break even or in profit just to cover my ass, just in case I was wrong on that trade. And this is one thing that I see a lot of you doing. You may not be making a lot of money, but you don't need to be losing a lot either when you're learning, because you do need to move your stop loss. And a lot of you just leave it far away because you want to give it room to breathe. And that's okay. You can do that too. But just remember, the more room you give it to go negative, the more potential for you to go negative. I've been in negative positions for weeks, guys, before. In my lifetime, I remember being at a Chinese restaurant. I didn't put a stop loss in, and I was like $2,000 negative. So my liquidation was far away. But I was $2,000 negative. So I knew, in my mind, I knew it was going to turn around and go back up into positive. So rather than cutting the loss or putting a stop loss right below my 2,000 negative, just in case it got worse, I just left it open. And then I went out to dinner, and I was at a Chinese restaurant. I remember this clear as day. I wasn't paying attention for like 3 hours because, you know, what's it going to do? Go to 2,500 negative, 23,000 negative? My stop loss was like, it would have had to go to like 6,500 for me to get liquidated. So I switched to cross. Instead of keeping on isolated, I switched to cross to make my liquidation go further away. It basically, when you're trading on cross leverage, guys, up here, instead of isolated, trading on cross, what happens is that when you're on, first of all, when you're on isolated, you're isolating your loss to just your margin, which is the amount that you risked on the trade, which is this number right here, $1,900. If it goes down to $1,900, I get liquidated. Boom. That's when I lose. But if I switch this from isolated to cross, see, right now it's on isolated, but if I switch it to cross, then this margin, it could go down to 1,900 and I won't get liquidated. It could go down to 5,000 negative. I won't get liquidated. It will go down until I have no more money in my account. Well, I was at the Chinese restaurant and I looked and I was $20,000 negative 3 hours after I was $2,000 negative. But I was still in the trade. I was like blown away. I'm like, holy shit, I didn't get liquidated. What's going on here? I didn't really understand cross back then. So when I'm telling you these things, guys, I'm not just preaching to you. I've lived it. I've done it. I've had $50,000 win days and $50,000 loss days. And the only reason I'm still here and teaching this and doing this is because I learned from my mistakes. And what a lot of people do is they'll make big mistakes or they'll have a bunch of losers and they will quit. They will say, this sucks. This doesn't work. Instead of just looking at analyzing what it is that you did wrong, what it is that you keep doing that you shouldn't be doing, and eliminating those things and stop doing that. If every morning you wake up and you say, today I'm going to go for a walk, I'm going to go to the gym, I'm going to eat healthy, and I'm going to go to bed at a decent hour so I can get a good sleep. But come the time that you're supposed to go to bed, instead you go in the freezer and you pull out a pint of ice cream and you eat it and then go to bed, you're going to wake up the next morning in the same position you're in, not getting the results that you want, not losing any weight, feeling like shit, spiking your blood sugar level, and probably gaining weight. And then you're going to, but if you're ignorant enough to look at yourself in the mirror and say, what am I doing wrong? Without even realizing that you're eating a pint of ice cream before you go to bed. Or if you go to someone else and ask them what you're doing wrong, but you're leaving out that little bit of information and not telling them what you're actually doing, then they can't diagnose it. They can't figure out what you're doing wrong. All they know is that you're doing that. If you're doing everything you say you're doing and you're still gaining weight and you're still not getting results, then something is wrong. You're not doing something right. So I would have to literally diagnose the situation in order for me to see. And I think some of you kind of leave out some very important information when you're telling me what you're doing. You're just saying, well, I'm taking all your signals and it's not working. Really? You should, if you're taking my exact signals, you should be up on these 3 trades right here just as much as I am. But I've had people tell me, no, I'm taking your signals exactly what you say to do, and I lost money. But meanwhile, I'm making money. It doesn't make sense. Something is wrong. So, and I'm not yelling at anybody. I'm not even mad. I understand the frustration. I feel it. But if you're not willing to take accountability and then really look at what you're doing, are you just getting in late? Are you putting your stop loss too close? Are you increasing your leverage when you're in profit? Are you adding contracts or margin when you shouldn't be? I mean, there's a lot of things that people do. Someone just said, when should I increase my contracts when it gets above 119? I personally never do that. I never do that. Now, it doesn't mean you can't do it. It doesn't mean there isn't a time to do it. But to me, that's greed. And I don't mean that in any negative way. We all have the greed. We all have, those are the 2 major emotions that we deal with in trading is fear and greed. And greed is, it's going good. Let me double down. Let me add more contracts. Let me increase my leverage because I want to make more money from here to here. Okay, I went long here. I went long here with $1,000 and it's here. Now I want to add another 1,000 because I think it's going to go up to here. And as soon as you add that other 1,000 here, and you literally go double your contracts over here, maybe you even increase your leverage, and then you enter more here, boom, it goes up and then comes back down, and now you're negative at a higher rate, and you're like, damn, what happened? What did I do wrong? This sucks. Instead of just taking the profit that you made from here to here and then waiting for the next trade setup. If you just did that over and over and over again, your account would grow. But so many people are trying to hit that home run and chase these trades. Some people get mad when they see, oh my God, it pumped. I was sleeping. I missed it. Okay, so what? Wait for it to hit resistance and then we'll short on the way down. Or wait for the next trade setup. Don't get mad at yourself. Don't get mad at me. Don't get mad at everybody in the group. And for all, listen, I understand being frustrated. Take it out on me. Send me a DM. Let me know what you're feeling, what you're going through, and I'll try to help you. But do not, and I'm telling you guys, I'm not going to tolerate it. Do not go posting in the main chat how frustrated you are. There's a reason.
Nico, sorry to interrupt you, but since you were on the Solana chart, I just had a quick question which could be a guidance.
Yes.
I got stop lost when this whole upswing happened this morning. But then I did re-enter because it was going up, and it came back to the original entry point of 183, which was part of Chad's signal. So yes, I mean, I'm in a whole lot of profit, but I'm just with this chart, I'm just trying to understand once it hits that resistance of at about 199, 200, what should be, and again, I mean, this is as a trying to ping your head. I mean, what should be the strategy here? To take partial profits, to let it see if it rides and breaks that resistance point, or take 100%, come out of the trade 100%. Like, I know there's not a holy grail around it.
No, I understand. I understand. Good question. I mean, it's pumping right now, guys. It is, obviously. And this is where you didn't see me enter. You didn't see me enter it because to me, it's too close to potential resistance. Now, if Chad gave a signal to go long down here at 183, that was a great entry for sure. And that's when you take those signals. And did Chad give a TP?
240.
240. That's way up here.
Yeah.
Right? So what you do is you wait first of all, then let me just see why he did that. Let me just go zoom out a little bit. Oh, okay. I mean, we do have some major resistance at 222 right here, this red line. The next level up is 261, and 240 is somewhere in here in this range. And that is probably a place mark, a mark, what do they call it? A place mark. You can take profit anytime you want. By the way, you can, here's another thing, guys. You don't need my permission or Chad's or anybody's permission to take profit. So you're up big right now. You're in good profit right now. Could you close that out? Yes. Now, you might say, well, yeah, but is that the best strategy? Not necessarily, no. So let's just look at this possible upward trend here. I would say we could get way up here to the top of this upward trend, right around here at 222. Probably where these two converge, somewhere like that, before seeing a big pullback, if there is one. May not be one, because if we break the 222, then we're certainly going to go up to the 240 range. And there's nothing wrong with that signal. That's a good signal. Me personally, what I do is I come to the lower levels, the lower resistance level. So I go on the lower time frame and I see what is the next resistance. The next one we just broke through 195. The next one we're hitting right now, 197, right here. And really, it's kind of like 199, $200. $200, right? And so we're coming up to that right now. So me personally, I'm not going to enter until it breaks above that and holds. So I want to see it get above that and hold above that level. So what should you do? Well, if it gets above that level, then you could move your stop loss into profit to at least 195.
Yeah.
Maybe somewhere under here, maybe even a little lower just to be on the safe side. Maybe 194. But the only reason I do that is because I want to lock in profits if I'm not paying attention. Here's the problem with doing what I just said. You're in a lot of profit up here, and then you put your stop loss here. And if it comes all the way down and hits it, you still made a profit because you got in down here, still made a profit, but you would have made a lot more profit closing it up here, right?
Yeah.
You could move your stop loss. You could move your stop loss to here once it gets above this level, but you're more likely to get taken out. But at least you're taken out with a lot more profit. And you can, and if it bounces there and continues to climb, you can always re-enter. But if you don't move your stop, if you keep your stop loss far away down here under your original entry down here, then you run the risk of getting in all of this profit and then giving it all back on the way back down. And if I took a poll and asked you and asked 100 people in a row, would you rather have some profit or none? A little profit's better than all of nothing, the way I look at it. And so now, is that strategic? Not necessarily. When you're new and you're just learning and you in profit. So there's a couple ways to do this. Move your stop loss to break even or in profit a little bit. So in this case, let's just say you got in right here, hypothetical, you got in right here in the blue line and you put your stop loss right there at the red line. And as soon as it's pumped up to here, you just move your stop loss into profit. That's it. So now you can't lose no matter what. And this thing keeps going up, keeps going up. You could move your stop loss a little further into profit. And let's just say it keeps going up and it gets above this level. And that is a major resistance level. And it gets above it and holds a support. That's great. If it holds a support there and starts to climb, then you move your stop loss up underneath that. Now you're in real good profit no matter what, right? So you just keep moving your stop loss up to the next, underneath the next support and resistance levels. You don't have to have any TP. You don't need to take profit target as long as it's continuing to go up. You just keep moving your stop loss, keep moving your stop loss, keep moving your stop loss. If it pulls back really quick on you and hits your stop loss and takes you out, well, at least you took you out with the maximum amount of profit.
When you say major support line, So how long do you kind of monitor it before you can figure out that, hey, I mean, is it falling through or is it bounced off and going up? Like, for example, on a 1 hour chart. So is it the closing of a candle after the 1 hour? Now, how do and maybe this is a basics question, but I mean, I'm just trying to figure out what do you mean by holding support?
Yeah, that's a good question. Generally speaking, depending on what time frame you're trading on, well, I'm on the 1 hour right now. So I would say holding a candle above. So if that is the major resistance and we get above it, what I like to see is that it holds above it, meaning it comes down and bounces on that, what used to be resistance. It comes up and hits it, resistance. Comes down, breaks above it, support. I want to see it hold previous resistance as support. For how long is your question?
Yeah.
So, well, normally, like I said before, I want to see it go through, bounce, and get higher than when it went through. So it went through and got to here, came down and bounced, and now it's climbing above where it went through, and then probably will hold that as support right there. So that's one way to do it. You want to see a higher high, because if it just goes through and then comes down and hits that as support and you go long here, it could just come up a little bit and then go down again. And so you want to make sure it goes higher and makes a higher high first.
Okay.
Now, is that always going to work? No, but generally speaking, a higher high is a trend reversal. I mean, it's not a trend reversal. It's a continuation. It could be a continuation pattern. If it's already going up, it's continuation. But if it goes up through this, let's just say, goes up through this, and then comes down and hits that as support, you think, okay, good, that's support. It's hitting, it's bouncing, but it only comes up to here and then comes down and hits it again and then falls through it and then comes up to here and hits it as resistance and then falls through this and then comes up and hits this as, then what you have is a high, a lower high, and a lower high, a low and a lower low and a lower low. That is basically a trend reversal. The trend was going up and now it's going down.
Got it. Thank you.
So yeah, there's no exact science. What we're doing is we're playing with laws of average and what's most likely to happen. So
yeah,
just breaking through a resistance line doesn't mean it's going to hold above it. It's got to hold first. So to answer your question, a candle on the higher time frame is definitely more accurate and more strong than a candle on the 1 minute chart, because just like watch, like I'll show you right now. Let's find an example here. So here we hit resistance. This is the hourly. So we got 1 hour, 2 hour, 3 hour, 4 hour, 5, 6 hours, 7 hours if you count this one, before it finally broke through. This was a whole hour, and then the next candle opened above this line. And then it went down a little bit. And then we did have a higher candle, but it did not hold above this. So remember what I said. It needs to get above where it broke out. Here's the breakout candle. It went above it, but it didn't hold above it. So it went above it, but we wanted it to hold there and bounce. So here's the breakout. We wanted to get above it and hold, and then we go long. But if it just falls right back below, that's not good. Now, ultimately, it did go up higher. This is a fake out. This would have taken out your stop loss and everything if you would have went long. So what do? We just don't get in unless it holds. Now, if it would have dropped down back down to here and then climbed back up, hit resistance again, and then broke through again. Now look at this one. Look at this time. It did break through again, and then it went above that same area right here, resistance, resistance, resistance. It went above, and the next candle held above it. Ultimately, it did make a higher high, but did it hold? It came back down, bounced. So if you're just looking at the 1 hour candle, it looks like that would have been a good entry to go long, but it ultimately came back down, bounced on it as support, and then fell through again. So if I go to the daily and look at this exact same thing, it's going to look a lot different. Shoot, I don't even remember where we were. Hold on 1 second. Let me go and find it. Which one was I just showing you? That was this right here. Let me just circle it. Go to the daily. Not one candle held above that line on the daily. So if you're on the higher time frame and you were waiting for a candle to hold above, it didn't. It went above it, this line right here. It went above it and then came right back down. Went above it, came right back down. Neither one of these candles held above it on the daily. So it does depend on the time frame that you're on. Now, if I go down to the 10-minute instead of the hourly, we had a lot of candles hold above it. We went above it, boom, boom, from below, above it, boom, 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 and it started to climb. So right here, if you were scalping, now that's the difference between trading on the 10-minute and the hourly and the daily. On the lower time frames, you're scalping. So it did get back above this level. It hit it, came down and held support here, and then it got above it. If you were scalping, you would have went long here on the breakout. You would have probably got out. Now, when would you get out though? Well, here's the good thing about scalping, and this is why you guys have to decide what your strategy is, whether you want to be a long-term swing trader, stay in these things for days or weeks, or scalp profit. So if I would have went long here on this breakout, right here, I would have been up. Let's just see. Not much, didn't go up much, but that's 2.9%. It's a 2.9% move to the upside on Solana. If I was at 10x leverage, that would be almost a 30% gain. Soon as I'm up right here, I could just close it out and take the profit and wait for the next setup. But here's what most people do. They don't do that. Why? Because it's going up. Why would you stop it from going up? It's going up. Might as well stay in. Stay in for how long? Does anything ever just keep going up? So we have an upward trending channel, which is bearish. And they tend to break to the downside, which it did. As soon as you see, if you got in here, as soon as you see this break in the upward trending channel, get out. Take your scalp, take your little 30% gain and wait for the next trade setup. When is the next trade setup? Here? No, because this bounced, but it didn't get higher than this. You need a higher high. Now, in fact, it hit here and came down lower, so now you have a lower low. Kind of like what we were just talking about a minute ago. Lower lows, lower lows, lower lows. As soon as this broke back below this support level, short. How far do you stay? How long do you stay in this short? Boom. As soon as you see this long wick and pulling back up, get out. You just took probably a, now this is scalping, by the way. You just took a 6% drop to the downside, a 10x leverage. That's a 60% gain on that scalp. So it just depends on what you're doing. Are you scalping? Or are you staying in these positions for a day or two, waiting for them to hit TPs or waiting for the Elliott wave pattern to play out? Or are you just scalping? I can tell you this. You guys saw, the testimonials from TJ who turned 250 grand into, turned $250 into like $26,000 his first month, 250 grand in 4 months, $1 million in 7 months. He was a scalping maniac. In and out, in and out, in and out, in and out, in and out. Now, am I recommending anybody do that? No, first of all, you got to like that. You got to like doing that. It's a personality thing. Can you handle that? Some people love the action. And I know if you go on Wall Street and you just Google highest paid, highest earning stock traders, you're going to see some names and they're scalpers. Some of these guys make $6 million a day, $6 million a month, like it's nothing on Wall Street, scalping. But is that for everybody? That's fingernail biting stress for some people and very fun for others. If you like gambling, TJ lives in Las Vegas. He's a self-proclaimed gambler, blackjack player, likes the action. He likes that. Now, he did get to a point where he turned his account so big that he started to take less risk, and he did move from scalping into something else. Bill might know more specifically what his new strategy is.
He's just trend line trading now. Very
Trend line.
simple trend line trading. He's got very simple rules. They're in the strategy section. And you know, he's made us a couple videos. I got to splice them together and put them up. So he's still around.
Yeah, and so basically what happens is, and just like Warren Buffett, guys, Warren Buffett is happy with 20% per year. Why? Because he's got billions of dollars in these trades. 20% a year on billions is billions, hundreds of millions. So the more money you get, the bigger your account gets, the less risk you should be taking. And it's called, you want to conserve your capital. You want to prevent any loss, and you want to take very little risk. You worked hard to build your account up. You want to make sure that you preserve your capital. That's your first rule. Rule number one, don't lose money. Rule number two, look at rule number one. You want to make money, I know, but you also don't want to lose it. Let me just look at some of these questions. Yeah, small gains add up for sure. Mark Sylvester, Derek says, I want to scalp. Scalping is fun. I mean, I have no problem with it. Guys, I have no stress, and I deal with a lot of shit, a lot of things that would stress people out to the max. I just closed on a 75 unit apartment building the other day. I went to sleep like a baby. I don't know what it is. I don't know what it is. Maybe it's just over time, I've just conditioned myself to be this way. But I don't chew my nails on these trades. I don't stress about it. I can go long and go to sleep. I can go short, go to sleep. If I wake up stopped out, I don't care. Because my wins exceed my losses. I'm overall up. My gains are far better than my little losses. So I don't worry about it too much. I'm not saying that it doesn't hurt or sting to lose. It does. I remember being really affected by it. But I started to understand the game more. I started to realize more, kind of like what I was talking about with relationships earlier. Once you really understand what's happening, you have to really see that it's all in your head. Everything that you're experiencing, everything that you're frustrated with, everything that you see, you don't see it with your eyeballs, guys. You see it through your eyeballs. It's your brain that's connecting what you're seeing and coming up with scenarios. Your brain is like looking, you think you're looking at things with your eyes, but you're looking through your eyes, and your brain is figuring out what it is you're looking at and putting it into something that you can try to make sense of and understand. We all see things differently from our perspective. And some people, and I know this because they told me, some people hear me say things and they think, well, you're so, I mean, you're right. I mean, I believe what you're saying, but you're so confident about it. And so, you say it like I shouldn't be worried. And because no, I know you're right. I can't help it. I can only speak from my perspective. So telling you, don't worry, go ahead, jump off the cliff. Don't worry, you're going to land in a pile of pillows. Don't worry, it's all going to be okay. I can say that till I'm blue in the face, even if it's true, but you're not going to believe me until you do it and land safely. But if I'm confident and I know that you're not going to get hurt, and I know that if you do this or that, whatever, this is the worst that can happen. When you use a movie or put your stop loss into profit or break even, the worst that can happen is you don't make a lot, but you don't lose any. That's the worst that can happen. I'm confident that if you just do that, you'll live to trade another day. Even if it doesn't work out the way we wanted, it doesn't hit the TP, you don't make a huge amount of profit, but you live to trade another day. What does that mean? That just means you didn't lose any. Your account's still there. You can now try again tomorrow until you get proficient and confident yourself. Then, that's kind of all just part of the process, guys. But what were we just talking about here? Solana. Let me just look at it real quick. We're going to have to wrap this call. We got 10 minutes before the onboarding. So if you're brand new, that's at 2 p.m. coming up here in 10 minutes. Solana, it did kind of break above this little level here at the $1.94, $1.95. It didn't quite hit $2 yet. There is some resistance there right up here. Let me just move this down a little bit. It's more like right there. Resistance, support, resistance. Yeah, it's probably right here. Yeah, support, support. And we are hitting that. Just hit it. That is that's the $1.97 level right there. So probably going to break through. If it does, we're going to be reaching for higher highs up here, but I'm personally not going to enter a position there unless it does break through. Let's go back down and look at some of these other ones. Ethereum pumping. And see all these support resistance levels? We broke through, hit resistance, came down and held support. Resistance, resistance, breakthrough, resistance. Breakthrough, support. So I'm going to take my stop loss and I'm going to move it up. Should I move it up to this one? Or this one? For now, I'm just going to move it to this one. I'm up $1,700, 147% on this Ethereum trade. On this Bitcoin trade right here, I am up 41%, $613. And on this Bitcoin trade, I'm up 3%, which is like $65 for the Bitcoin. But on this trade that I did last night, this MYX, I'm still negative $700. I don't know what's going on with that one, but I'm not worried about it. I could close it out right now and still be up, still up $1,700 overall on these three trades. But I have a feeling that if we do have a big pullback on these, because that coin was not correlating with Bitcoin, it was very negative when Bitcoin was pumping. I mean, it's going negative while Bitcoin's going up. So what I mean by that is that when if this finally hits the 119, Bitcoin hits the 119 and comes back down, I will close these trades in profit or short them. And this one on the way down, this one will pump back up probably into profit because it's not correlating with Bitcoin and the other ones. Otherwise, it'd be up right now in the green also. So do I think we're going to have another drop for Bitcoin? Sometime we aren't. So when we do, this one will go up because it's not correlating. Let's just take this, this, and this. We do have some kind of an upward trending channel happening here. That doesn't last forever, guys, just so you know. This is technically a bearish rising channel. They tend to break to the downside, but they can go up like this for a while before they break to the downside. You just don't know when it's going to happen. And we only have really maybe one touch point, maybe two if you count this one, where this candle started and then we touched it here. So if we hold above this resistance at the $4,780 level, which it looks like it's trying to do, we could see another run up before possibly breaking to the downside. But how high are we going to go with Ethereum? We are already, let's just go to the daily and look. We're already up here in all-time high territory. Pretty sure that this is all-time high, right? Can't remember, but I think so. We broke out of the, year-long resistance here and we retested and held support and we're climbing. So this might be it. The big pump. I mean, we got up to 4,800 here, 48, 47, and then we dropped and now we're just coming back up to it. So right here is the all-time high, 48, 47. And we are coming up to it right now. Let's go back to the 1 hour. Just take a quick look again. Yep. I mean, we pretty much beat it. This is all-time high for Ethereum. Right there. If we hold above this, guys, we could see some much further pumping to the upside. But if we don't, in fact, what I would do if I was smart is move my stop loss right up to this level, because if we do not hold above that, we will be dropping. It'll just be a double top. And there's no reason for me to lose that profit. So I'm going to do that. I'm just going to move that right there on Ethereum. And that would be approximately a 1,700% gain or $1,700 gain for me. If it falls back below that level, I will just cut that as take my profit and wait for the next setup. Don't even care. There it is. I mean, here's my maybe I have it too close. And it's coming down to test it. It could be right here where these wicks are. So maybe I'll just move it down a little bit just to get out of the way, just under that right there. But what I'm hoping for is it holds the support here and continues up. We got bull flag, possible bull flag after another. And let's just look at Bitcoin again. Before we wrap it up. Bitcoin, very similar situation. We broke above the bull flag. Let me just get rid of all these lines. I know it's a little confusing here. This is the overall bull flag that we broke above, went to an all-time high, had a falling wedge, came back down into the bull flag, dropped to the bottom. Here's the bottom line of the bull flag right here. And we bounced on the bottom. We broke out of the falling wedge. This could be like this. Let me just dial this in a little bit tighter. And we popped out. And we went above the resistance here at 114, 115. We went above the top of this bull flag resistance here, which was back here, resistance, support, resistance. We went back above that. And now we're in between that, holding as possible resistance right there, bam, and this line right here, this yellow line, is the overall upward trending support going all the way back to when we were at 74.5. Let me just zoom out. That's this yellow line right here. So we're coming back up to that. And where that converges is with this blue line here, which is the 119. So what is more likely, guys? Is it more likely that we are going to, let me just go to a little bit lower time frame so these lines don't look so wacky. Go to the 6 hour. What is more likely? Is it more likely that we hit this as resistance and bounce and come back down? Or that we break through this and hold as support and go up? That is a crystal ball question. I don't have the answer for you. Otherwise, I would just tell you definitively what to do. So what we have to do is we have to wait to see which one of those things happen. So a lot of people say, Nico, what do you think is going to happen? What do you think? Is it going to do this or going to do this? And I always say, if this, then that. If we break through this yellow line and this blue line and hold this support, then we're going up to a new all-time high. If we bounce on this yellow line and this blue line right here at 119 and we can't get through that and we start to fall, we're going back down. And we're going to go back down below the 112, possibly to the 110, 108, somewhere down there. And that's something we don't have to worry about right now. We'll talk about it. In fact, because of where we're at right now, guys, and because of the timing and the situation here, I will probably go live again tomorrow. I know I've said that a couple times in a row over the last few weeks, but I will do it if there's something amazing happen. But tomorrow I will, whether it's just for a little bit or just to give you guys an update. But sometime, or maybe even later tonight, if I see something crazy happening here, or I think that we're going to bounce and come down, because we do have, it's probably going to be tonight sometime when we get up here, unless this thing just really pumps. But if we can break through this and get back above that yellow line, guys, that'll be amazing, actually, because it's the first time that we broke below it since 75K and held for a couple days from the breakout here, August 17th, all the way down to here, the 22nd. That's a week that we've held up below it, and now we're just coming back up to it. So this could be major resistance. We might not get through it, and if that's the case, we could see some lower lows. This would just be a big head and shoulders, and the M pattern would happen, and then the Elliott wave would also come into play. All right. Onboarding starting right now. If you're brand new, get on that. Bill posted the link in the Zoom chat. He also posted it in the Discord group right here. He also posted in the announcement section right here. Cannot miss it, guys. We post it everywhere. I post this live call that you're on right now. I posted in the trade chat. I posted in the Signal channel, and I posted in the announcement channel just like Bill does. So we want to make sure you don't miss any of these calls. So get on that. I will keep you guys updated when I see anything. We have a major pump, obviously, today. Everybody should be in profit if you got in on any of those signals. And some of you, I know you're waiting. That's fine. Don't be feeling like you missed out on anything, guys, because it's like the bus stop. You missed the bus, the next one's coming. 10, 15 minutes. There's going to be another signal, another opportunity. It never ends. It just keeps continuing, ongoing indefinitely into the future. And so don't worry about that. It's better that you learn what you're doing, watch the videos, get on these live calls, watch the replays, ask questions before you risk real capital. And if you're okay with risking, just make sure it's a risk that you can afford to lose, that you're not going to cry over, that you're not going to complain over. Just think intelligently, guys. Use your better judgment. Okay. There's nothing wrong with taking a little bit of risk. And if it doesn't work out, you just figure out what you did wrong and get back on the horse and try it again. But what I was saying earlier before I was interrupted, I was talking about not what you should not post in the main chat is negative whining and crying, because you got a lot of new people in here that are just joining and they're excited, and you are having like a pity party. And no one else needs to see that, because chances are someone else who's brand new sees that, they're going to think, oh, well, this guy, it's not working for this guy, this must not work. No, that's not how it works. That's one guy out of 1,000 people in here who's having a bad day. And I'm not saying don't have a bad day, and I'm not saying you don't have a right to complain. Just don't do it in the main chat, guys. Complain to me. If your complaint is with me, complain to me. Send me a DM. Let's hop on a one-on-one. Let's see what you're doing wrong. We are here to help. Bill is in the help desk 24/7. If you're having an issue or you can't figure something out or something's not working for you, let's see if we can help you figure it out before you go announcing publicly that, this doesn't work, because we got plethora of wins in the wins wall showing that it's working for obviously somebody, including myself. Hundreds of people posting in the wins wall every day, multiple double and triple digit gains. Obviously it works, but you will find someone to jump on your pity party. You will find someone to agree with you if you post in the chat something negative. You will find somebody that'll agree with you, because there's people looking for that too. There's people looking to find somebody who feels the same way they feel, and before you know it, you're going to ruin the chat. And I'm not going to let you do that. I'll just delete it. And it's not because I'm trying to hide your comment. Bring it on this call and ask it live so that I can answer it in front of everybody, so you can hear my answer to it. Or send me a DM and I'll get on one-on-one with you, or Chad will, or Bill will. But you don't need to pour any poison into the water and poison everyone with it. It's not everybody else's problem that you're having a bad day. But with that being said, guys, we're having a good day today. Up almost $2,000 on these trades, and Chad's signals are all up as well. And I think Chad had like a 90% win ratio the last month. I was at 68%, something like that. And so, some people hear that and they're like, well, that can't be true, because I took this signals and I didn't get the same return. Well, you're doing something wrong. That's why we need to figure it out, because either you're not closing your trades out in profit, or you're not putting your stop loss at break even or in profit, or you're risking way too much and your liquidation is too close and you're not using the stop loss at all. There's all kinds of reasons. I don't know which one it is without seeing your specific situation, but we are here to help you pivot and fine tune and tweak until you get it right. Thank you. Yes. Go ahead, William.
What is it like? How much does it cost for a one-on-one call, or how does that work?
Go into the school area and just click the button to book a one-on-one call. I'm not sure if there is a fee or not. I think there is. It depends on
I thought I heard there's a fee or something. That's why I was just wondering.
I think there was a link that it was like $97 or something like that, but that was for people who just wanted to pick somebody's brain who weren't in the MasterMind yet. But might be. I haven't looked in there. Emmanuel says $97. Like if you want like a whole hour call or something like that. But if you're a paid in full member, we were including a one-on-one, but you did have to go through all of the videos first, and you had to actually be past the 30-day trial, and you had to actually make winning trades. Like you had to have like done at least some things first. Because the reason why, guys, is we don't want you booking one-on-one calls to get on with me and then say, well, I don't really know what to ask you. I don't really know enough to ask any questions. Okay, then what are we doing on this call? You know what I'm saying? I don't have the time for that. But that's why we have all of these training videos that we've already done, and all of these step-by-step tutorials we've already done for you to go through first. And then these live calls to get on and ask questions. But if you feel like you actually understand some things and you're doing things right and you think you're doing it right, but you just need to get to the next level and you have an intelligent question, or you want to have an intelligent conversation that you already know some things, but you just want to hear, what you're doing wrong or whatever, then yeah, book a call. But don't book a call if you don't even know what to ask. You know what I'm saying? If you don't understand anything yet, get educated first. And it's not because I'm being rude or because my time is too valuable. No, it's just because a lot of times I've got on one-on-one calls with people and they just don't even know why they're on the call with me. And they just want me to tell them something inspirational. I don't,
Well, I know a lot of stuff, whatever, but I guess I'm too much of a risk taker, so it's biting me in the ass every time. I'm like, fuck, every time I'm winning and then I'm losing and then I'm winning and I'm losing.
Are you winning? Are you winning and losing, or are you winning and then those winners turn into losers?
Well, I'm winning and then I'm losing and then I go back down on all my account and then I build it up again a bit and then it's like
okay. So
I take too much.
Yes.
I take too much of a risk. I'm
Yes.
I'm a risk taker, I guess.
Yeah, you are, because the fact that you can build it back up again means you know how to do it. You know how to win, right? You know how to get it back up. And then once you're up, you start to take bigger risks because you want to grow your account faster.
Exactly.
You give those profits back. So I can almost diagnose what you're doing wrong right now. Just keep doing what you're doing when you're winning. Keep taking those small little wins and keep building your account up. And then eventually when you get to double, triple, quadruple your account size, then start taking less risks, not more. Do the opposite of what you were doing. And then what happens is so let's say you start with $1,000 and you build your account up to 5,000, taking very little risk, small little wins, small little wins, small little wins. You turn $1,000 into 5,000. Once you get to $5,000, instead of trying to turn that into 10,000 in one trade, taking a big risk, what you do is you lower your risk. So now you take 5,000, turn that into 5,500, turn that into 6, turn that into 65. And you're doing the same thing you did to go from 1,000 to 5,000, except for you're doing it with a little bit more margin, but not more risk, not more percentage risk. Okay. And then you'll get that 5,000 to 10,000 and so on and so forth. But,
yeah,
I'll be happy to get on a one-on-one with you. You can book it, but really you already know. I think you kind of answered your own question. You already know how to do that. You're just not doing it. It's kind of like going to sleep, eating ice cream, like my example earlier. You already know that you shouldn't. Me getting on a call with you, tell you to not eat ice cream before you go to bed is not going to help you. You already know not to do that, right? The fact that you're doing it means it's just a discipline thing. It's just a staying strict to your strategy that was getting you to that higher level in the first place and not deviating from that. Here's the problem. That can be boring for some of you. Just like a nice, calm relationship is boring. This is why people go and screw up and cheat and get in trouble, because they're bored. They're bored with how perfect everything's going. I got to throw a monkey wrench into the spokes.
I need the action, I guess. My ADHD wants that action, so I'm gonna take that risk and then
that's right. Every time. So here's what you do. Build your account up, but this time, instead of taking a risk with that whole account, move a portion of that 10% or 20% into a sub account. Take your big risk in that account, leave that other account to slowly grow.
Okay.
Try that.
I'll try that a little bit. Thank you.
All right.
Have a good day.
You're welcome. Have a great rest of your day, guys. Get on the onboarding call if you're new. Hope this was helpful for you. We love you. We want you to succeed. It pains me to see anybody having problems or complaining, but if you are having an issue, get help first before you risk more money. Before you go and throw all of it away or burn an account or blow up an account. By the way, I've blown up many accounts in my lifetime before I got help, before I actually went to and paid a lot of money to mentors to teach me how to do this, when I went to OTA. And blowing up account just means putting money in, trading, making some money, losing money until I blew my account up, meaning I went all the way down to zero. And then what I do? Deposit again and then try it again. I've done that a dozen times back in the beginning when I first started trading. The only reason I'm still here and the only reason I consider myself successful and know what I'm doing now is because I didn't give up and I stopped doing the things that were causing me that problem. Kind of like the gentleman that was just speaking. Just stop doing the things that cause you to blow your account up after you build it back up. And I know it sounds oversimplified, guys, but really, it's not a matter of you needing more stuff. I'm going to say this one more time. This is kind of like a little life coach lesson right here, guys. When we want to get in shape physically, we think we need stuff. I'm going to go get some new tennis shoes. I'm going to go get a new outfit to go walking in or go to the gym in. I'm going to go get a gym membership. I'm going to go to the grocery store and buy all the healthy food. No, you don't need to do any of that shit. Just stop eating junk food. You don't need even shoes. You don't need anything. Go for a walk. Stop putting crap in your mouth. Watch what happens. You're going to get leaner. Your fat's going to go down. Your blood pressure is going to go down. You're going to get in shape. You don't need to add anything. What you need to do is stop doing things. So it's a process of elimination, not a process of addition. When you're trading and you have wins, losses, figure out what you're doing wrong and eliminate the things you're doing wrong. You don't need to add more things to do right. You need to get rid of the things that you're doing wrong. Generally speaking, just like enlightenment, people want to be enlightened, or they think that they're on their way to enlightenment, and they think, I need to go to this guy's class, I need to watch this meditation, I need to go to this workshop, this boot camp, so that I can become more enlightened. No, what enlightenment is chipping away at all the things that you thought were important, getting rid of all the things that you thought you needed until you realize you don't need them. Chipping away at everything that you believed, that you previously believed, that you've now discovered were not true. It's a process of elimination. You become more enlightened by getting rid of stuff, not adding more shit to your life. So same thing here, guys. I know it seems, I don't know if any of you have ever been an actor or went to acting class. I did years ago, back in my 20s, I wanted to be an actor. So you go into acting class and guess what they do? They teach you how to act. And guess what? Ultimately, you have to learn. You have to eventually learn to be yourself. You have to learn how to act without looking like you're acting. Just like reading a script. You have to memorize the script. In other words, you have to read the script, memorize it, and then say it back, making it look like you weren't reading. So do you understand what that process is? That means you're basically going full circle. You already knew how to act. You already acted natural. You already were who you were. You already were convincing without acting. Then you go to acting class. They teach you all this shit. You get confused. You don't know what's going on. You're trying. I'm trying to act. I'm trying to act. Well, stop acting. Go back to being yourself. Well, I thought this was acting class. So they were teaching me how to act. Yes, but to become a really good actor, you need to present yourself in a way that is believable without you pretending, or without people thinking you're pretending. That's acting. So when you watch a movie and you cry or you laugh, it's because the character, the person playing that role was convincing enough to make you shed a tear. Do you think they're really having a bad moment in that movie? No, they're acting. But what they did is they tricked your mind into believing them. But can someone pretend to cry? No. You know what those actors do? They actually cry. They get into the emotional state of crying. They actually think of something sad or do something sad, and they live that moment. And so it's so believable that you believe it and you cry. I know I can get off on a tangent here, guys, but the bottom line is that, you know, trading might just be more than learning about trading. You might just need to understand human emotion. You need to get to know yourself better. You need to separate fear and greed from money, which is very difficult to do. You need to detach yourself emotionally from the money, which is a hard thing to do sometimes. Just like acting, you need to detach yourself from the character, put down the script, and act as if you are that person that you're playing, that role that you're playing. Stop trying to memorize lines and just do it the way it would be done if you were in this real situation. And when you start to do that, you start to say, oh my God, I don't need this acting class anymore. Anyway, let's see. That's immeasurable to hear and know from Unico, just to realize that you've struggled and stumbled doing this, and now you are where you are, who you are in the crypto trading world. Thank you. I appreciate that, Emmanuel. And yes, believe me, I say this over and over. I've been saying it since the beginning. Guys, first of all, I started trading without help and traded the Forex market for a year. Made money, lost money, taking gambles, doing that same thing, going up, going down, getting so mad at myself for allowing myself to lose the money I just made 2 days ago. And then I finally said, what am I doing wrong? I could have just quit and gave up, but then I went and spent 30 grand going to OTA, Online Trading Academy, to learn how to trade options and understand support resistance, because I knew that there was this thing called technical analysis and I just wasn't getting it. So I went and learned. And then I realized what these masters are doing. They're not trading all day long. The people that make the most money sit on their hands most. They trade the least, but they make the most because they're waiting for the optimal prime time setups. And they're not going in and out, in and out, in and out. That's scalping. Don't get me wrong. A lot of people make money scalping, but these people first master trading first before they become excellent scalpers. And once you have that emotional thing down where you're not emotionally detached to the money anymore, meaning you can walk on the street without feeling the pain. You ever see these monks who are getting hit in the shin with a bamboo stick over and over and over again? They don't even feel it anymore. Or these kung fu masters, Bruce Lee, ever watch those old movies? Those old shows? It's discipline. It's mastery to a level where they're above it. They rise above it. They don't feel it anymore. They're not connected to that pain anymore. And same with trading, guys. It's painful to lose money, but that's only because you're emotionally attached to the loss. And some of you are getting freaked out over $20 or $10, which is kind of worrisome to me. Like you're so stressful. And I'm not saying that that's not a lot to you. I'm just saying that when you look at the grand scheme of things, oh my God, do I have my stop loss in the wrong place? I'm so scared that it's going to go down below my entry and I'm going to be negative. And then they send me a screenshot and they're trading with $4.50. I'm like, if you can't detach yourself emotionally from losing $4, you're going to have a problem getting up to 10,000 or 20,000. So let's first work on that. And I'm not insulting anybody, because any amount of money to you, I know you don't want to lose any amount, and $5 to somebody could be a lot to someone else, but I mean, it could be little or nothing to someone else. But the point is that you really can't be worried if you're doing everything right and you have a strategy and you're taking the right trade setups and you're entering and using the proper risk management. You cannot be worried about the loss, because losses are going to happen. But if you're taking 10 trades in a row and you're winning 6 or 7 of them and you're losing 3 or 4 of them, as long as your winners on the ones you win are much higher than the losses on the ones you lost, then that's just the numbers. That's just the way the cookie crumbles. Don't worry about it. Just to get clarity on that, if I'm making $500 profit on my winners, 7 trades, 70% win ratio, 7 trades in a row, making $500 profit. But on the 3 losers, I'm losing 100 on each of them. Okay. I'm making $4,000 on my 7 winners, $500 times 7, and I'm losing $300 on my 3 losers. So that means I'm netting $3,700. Do I worry about it? No. So once you just got to, I don't know, some of you got to switch that in your brain and not worry about it. And I know a lot of you already passed that. A lot of you, I'm preaching to the choir right now. So anyway, if you're brand new, get on. I see some people that are brand new that are still on this call. You should be on Bill's onboarding call. He already posted. Oh, Mike, thank you for that. There is somebody posted a link, but get on the onboarding call. The link's in the chat. It's in the Discord. It's in the Trade Signal channel and the announcement channel. If you're not already on that, get on that. Have a great rest of your day, guys. I got to run. I got another call I got to get on here, but I will be watching the charts and I will post any changes I see. We're still climbing. We're still climbing right now. We're at 117.2 on Bitcoin. We're on our way to 119, I think. And then I'll let you know what I think is going to happen if we get past that, or if we're going to bounce and come back down. All right, guys, have a great rest of your weekend.